Hi and welcome to the Market Alert for Friday, the 10th of March 2023. So yesterday, banks and Bitcoin and bonds yields battered ahead of payrolls prints. That's the non-farm payrolls today. Bullion was bid. There's nothing like forced capital raise to wake markets up. And you can see there we've got this wake up with what's going on. Maybe the markets are going to wake up to the fact of what's been going on for the last few months with the continuation of inflationary data. US banks sold off on Contagion fears yesterday, wiping out their earlier jobless gains claims. That's what we had yesterday, the jobless claims. They actually increased for the first time for a while. And stocks and yields slide on financial contagion fears. That's an interesting one, isn't it? What's going on then? Something wrong with the banks? As we saw there, wasn't it? Sold off on fears. There's one headline. There you go. Yeah, US banks sold off. So what's coming down the line? Interesting. Right. Yesterday, let's have a quick look. We had unemployment claims. This is the weekly claims. It's what we used to have known as the unemployment numbers in the UK. 211k, 195 previous, 195 forecast. And yeah, I mean, it's in US terms, it's peanuts, but it was enough to send the markets to the upside because it may bring about a pivot again by Powell. I mean, it's ridiculous, isn't it? But there you go. That's what was yesterday. Today we've got GDP month on month for the UK. That's going to show apparently an increase. Well, we'll wait and see. And then the big one for today that could reverse the overnight and last night's decline in prices, which we'll look at in just a moment. This 224 is absolutely fascinating. I can't wait to see what happens at 1:30 p.m. I will certainly be at my post to watch this come out, because that's half of what was the previous. So that is going to be a fascinating news release there, and how they, of course, they interpret it after, and whether they want to bring the markets back after the massive declines overnight as well, with this so-called contagion that it seems to be going on behind the scenes. So, yeah. Anyway, let's move on. Have a look at the Dow, see what's happened during yesterday and overnight as well. So as you can see from the chart there, the market's down strongly yesterday. Went up fine to begin with. We'll look at that in just a moment. Let's just deal with the daily chart. We went through the 200 MA and we went through the two supports to the left as well. I was watching this last night, traded some last night as well, held the positions, paid dividends. The market was just starting to fall off. And yeah, it worked out the way it should. Now, that's unusual when you've got something like the non-farm payrolls the day before, but it was worth a punt. The market's down on the overnight as well. So let's look at this in the 30-minute chart to get a good idea. So we moved up yesterday to the high. We then put in the retracement. We were overbought. And then the market started to make its way down. And then late on in the, early evening, the market started to decline, and prices moved lower. In fact, they actually moved. It's one of the biggest moves from high to low. We'll go to the low of where we're currently trading, over 1,000 points there in the Dow. We've not seen this for some time on the downside. So like I say, it's going to be really interesting today if they can bring this market back with the non-farm payroll. They're going to have to come out at that 224 level, but that would raise suspicion anyway. But it would be a positive just the same as yesterday with those claimant count numbers. So at the moment we're still short and we're below the low. So we're due for a bit of a bounce in the market, as can be seen by the prices there. They're just starting to trade sideways a bit, having moved down sharply overnight. And in the German DAX yesterday, first red bar for a while. And also through the 50% retracement there, 15,425, and then there's your downside targets back to this low. Whether the market's got the momentum to do that today, who knows? Again, it's going to be non-farm payroll dependent. 30-minute charts yesterday, we moved down, we moved back, we were oversold. The market started to move up, went up with the the claimant count numbers to the high, overbought, and then the market started to make its way. And then as it started to break the DP area, looked at ways to actually get on this, and then it accelerated all the way through and held overnight as well, with stops at break even. Because of what I said earlier, I wouldn't normally do this, but because the non-farm payrolls tends to bring quiet and zero volatility to the market, which again, I come back to this, what's this bank contagion that's in the background and looming. So anyway, the markets moved down sharply, as can be seen there. So profits were taken, and in the 5-minute chart, you'll see yesterday we had a bit of a down move in the futures. We then came up in the cash. The market didn't hold. They moved it down till it was oversold down at the S1, and then they brought it back till it was there was divergence. It ran out of momentum. The momentum was pointing down, and then back down to being oversold, and then moving back up, including the claimant count numbers there. So in the evening, notice that prices were starting to struggle, and we got this lovely 89% retracement there, with the market having no momentum at all, and it attempted to come back, failed, and then it just started to move lower, along with the Dow that accelerated a bit more. Overnight, the market below the low, now towards the S1. Watch for the S3 if the market does sell off, which is down here at 15,180, because it's likely to find support. It's got a lot of support to get through there as well, physical support with these lines. But watch the 15,200 level, which will be this BRN here, if the market does move lower there. So trades this week were really nothing. It was about 400 yesterday afternoon, and then with the evening's trades and overnight, 1,380 so far. They got 4.64 profit factor and 52.38 as the win, and then 47.62 loss, so just over 50-50. This suits my sort of personality of trading, is holding positions. It's what I started with way back in 1991, and when I think back to those days now, actually buying options and futures contracts blindly, using paper charts because there was no internet. It hadn't even turned up at that point. I had a chart book that was sent from Chicago, and then went through the charts, updated it using the Financial Times prices each day, and then made decisions based on that, and then traded the full futures contract. It seems insane now, but the markets were different in those days. And then all I had was a free phone number to the brokers, Opportunities and Options, the company was called, based in Ojai in California, and then placed the trades that way, and then just got on with life. The problem is now we have so much information at our disposal that we can be, or become more emotional by what we see in the charts and the decisions that we make, and it's so important to try and be detached from that. It's very difficult to do, and that includes me. Whereas when I can hold a position, go out and do something, it makes a vast difference because you can't see it. You're not emotionally involved in it. So I can do either or, but I was raised on positional trading, and it just suits the way that my personality is. If I can hold a position for several days, then I'll try and do that. It's a lot better, like I did with the silver positions over the last few years as well on the long side. So in the S&P, way below the 4,000 level. As you can see yesterday, the market moving lower, taking out the 89. I've drawn in the next downside targets there, 78 and 89 down to 3841. This takes us back to the December lows there, but it looks like at the moment the upside's over for the markets, unless the non-farm payroll numbers are Mickey Mouse today and they come out at 224. Yesterday in the S&P moving up, and then making its way to the downside there overnight as well through the low. That would be any bounce. First upside target, which would require a lot to get through, could become a resistance level. And at last the FTSE is moving down as well, as can be seen here after weeks of moving to the upside, or months going back to October. If you look at the weekly chart there from October all the way back, this now, whoops, that's the S&P, sorry, I'm going to say, because the FTSE made a new all-time high. That's more like it. So moving back from October, you can see it's been due for a correction for a long time heading towards that 89 would be the first, and then down to this level to draw in further downside targets, and then ultimately from the main swing low to high, this would be where you were looking at back at the 7,000 mark if prices do continue and this so-called contagion unfolds. GBP JPY up on the overnight, sideways during yesterday. It's not much movement in this market at the moment as there used to be, but saying that, overnight it certainly shook itself up, and you can see the 100-point bar in the 30-minute chart and through the 200 MA. So again, that was noted in the daily chart there, taking out the previous day's high. Meanwhile, in the pound, this also up yesterday as the dollar moved down, and the reason for that, of course, was the claimant count came out with more people being made redundant, laid off, whatever the term you want to use. 30-minute chart of the pound moving up, as you can see they're stopping at the 200 MA. It's giving it a bit of resistance overnight. It's trying to get back above this at the moment, but this is going to have to wait for the news at 1:30 as well. And finally, in the US dollar, this is moving up at the moment in the 30-minute chart. Let's have a quick look at the daily. I'll see where prices are. You can see they're just trying to reverse off yesterday's down move. So a bit of support coming in there. Again, obviously the fear is starting to take hold again with whatever this, like I say, so-called contagion is likely to be. And finally, let's have a look at the metals. Well, silver is interesting. It didn't go down to yesterday's, or rather to Wednesday's low during Thursday's session. It managed to hold, but it's already been and had a look at it overnight in the daily chart. As can be seen, still expecting lower prices on this. There's your 30-minute chart. Yesterday managing to move prices back up and moving down and just taking out yesterday's low. But we've also got the low of the previous day as well, which is down at this level, which is also being tested. Interestingly enough, in gold, it's still a lot stronger, as can be seen here, with prices moving back to the upside. And the 30-minute looks completely different to the silver chart. Let me just show you the two. So we've got the 30-minute moving up sharply. We've got a triple top there of resistance, but the market's still up. Have a look at the 30-minute by comparison. You can see how it's been hammered to the downside there. And in the weekly chart of silver, as I say, we're going down to that 18 level there. Let's just have a look at the gold-silver ratio before we conclude, and then I can get this edited and out to you ASAP. So gold-silver ratio, this is the weekly chart. So you can see what this week's done with the silver price being crushed and heading back to that 96 level over here. So yeah, silver certainly being moved sharply lower, abnormally lower, as you can see there. So this has been moving up since where are we, January, and heading towards that 96 level there. Okay, that will do it for this one. I can't wait for the NFP numbers just to see the sleight of hand and cooking of the books. So yeah, that's it for this one. Have a great weekend as ever. Thanks for watching. See you in the next one.